Hey, Dan Passarelli here. Happy Monday. We have a lot to talk about. Let's just jump right in. So the market sold off pretty well today, and that was mostly led by the tech sector, specifically the subsector within that in the AI area, the artificial intelligence area, both in creators of AI tools as well as creators in chips for artificial intelligence tools. Now, the reason why this sold off is because the Chinese AI company DeepSeek is online and you can download it from the App Store, or you can put it right on your computer as open source software. And the buzz is that it functions as well as OpenAI's ChatGPT, and that company is only a year old, DeepSeek. And DeepSeek uses a very small percentage of the chips that the American companies in AI use. So that's bad for the companies that create those tools like Microsoft and OpenAI. But it's also bad for the chip makers, because if the Chinese DeepSeek company can create a comparable product that uses fewer chips, well, then people will be buying fewer chips. Now, that sounds like pretty bad news for the market, but it's really mixed. There's kind of a lot to talk about here. So first of all, we can look at it from a fundamental standpoint and look at the PE ratios. So the PE ratio for the trailing 12 months of earnings is 46. That means the price of Nvidia's stock is 46 times the earnings for the past trailing 12 months. Now, that's not really a super huge PE ratio. It's only 8 points above Apple, which has a PE of 38, but it's nowhere near something like Tesla at 108 or even Palantir at 371 PE ratio. Now, if we look at it from a technical standpoint, we see here that Nvidia has dropped down below its 200-day moving average. Now, the 200-day moving average is a very important pivot level. When we're above it, it acts as support, but when we penetrate it, it can then become resistance, holding that stock down. Now, I always like to see a confirmation candle the next day, or as John likes to call it, a two-bar close. So if we close below the 200-day moving average today, fine. But if we again close below it tomorrow, well, that becomes much more meaningful. And that could imply that the rout may continue both for Nvidia and for the market as a whole. Because when we think about the market as a whole, what's really been driving the S&P 500 over the last year or so? Sure, it has to do with interest rates, but that's because of the very small handful of tech stocks that are so overweighted in that capitalization weighted index that it's pushed up the S&P 500. So as those tech stocks decline more, that'll drag the whole market down with it. So this is something really important to continue watching and to make sure we're getting good news sources, which I will be bringing you in these videos, all the things that are actually important without any of the fluff. Hope that helps. This is Dan Passarelli. Trade smart.